First Solar was one of the biggest beneficiaries of the Inflation Reduction Act in the last year or so, and that continued in the second quarter of 2024. But that actually brought a lot of uncertainty to the company and investors in the future. So I want to dig into the company's recent earnings report that came out after the market closed on Tuesday and really highlights some of the risks and challenges that a company like First Solar faces. The company management has done a really good job expanding their production, particularly in the US, to take advantage of Inflation Reduction Act, demand in the US for solar panels, but that may not bring a lot of uncertainty depending on the election. That was something that management talked a lot about on the conference call. So I'm going to dig into exactly what we found out. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's get right to the report. This is the press release. You can see here that sales were $1 billion in the quarter, net income of $3.25 per share, and net cash balance $1.2 billion. First Solar has done an amazing job keeping a very, very good net cash balance that pulls out any debt that's on the balance sheet while expanding production. So they've gotten a lot more efficient on a lot of those expansions as well. The big thing, and this was kind of a surprise to investors, was that guidance for the full year was unchanged. So net sales $4.4 to $4.6 billion, gross margin of $2 to $2.1 billion. This is what's most impressive in the manufacturing business, is that gross margins can be that high. If you go back to the late 2000s, First Solar had margins that were in excess of 50% for a period of time. Obviously, that didn't last forever as competition came into the market, but a lot of this is also coming from the Inflation Reduction Act, and they quantify some of that here. For just the third and fourth quarter, they expect $240 million in the third quarter and $335 million in the fourth quarter benefit from the Inflation Reduction Act. So that is $575 million just in the second half of the year that is essentially going to flow straight to the bottom line. So this is why the election is so important and why it got so much attention, is that if these subsidies go away, profitability is going to be absolutely devastated for First Solar. That is also why these numbers were a little bit less than I would have expected kind of going into the year. Demand was phenomenal last year. This was their backlog at the end of 2023, 78 gigawatts, so multiple years of backlog for manufacturing. They have sold 6.1 gigawatts worth of product through the second quarter. Bookings through the second quarter, though, only 2.3 gigawatts and only 1.3 gigawatts so far in the third quarter. So this backlog is starting to fall. And what management said is that the uncertainty around the election, around subsidies, around the future of interest rates, that is all impacting buyers' decisions on what they're going to do about solar developments and project developments in the future. But if these subsidies do remain in place, First Solar is going to be one of the biggest beneficiaries because of all these expansions that they have made over the past couple of years. And this is basically 2 years between when they make the decision and when they're actually going to have production in order. So there was an Ohio expansion and an R&D facility. That is one of their older locations in Ohio. That was commissioned in July 2024. So incremental manufacturing capacity for this year of 0.9 gigawatts, and will bring U.S. capacity to 7.1 gigawatts. When the Alabama manufacturing facility is expected to open later this quarter, that's going to be another 3.5 gigawatts. That's basically the size of a manufacturing box, if you will, that will bring U.S. capacity to 10.6 gigawatts. And then another facility being built in Louisiana that is expected in the second half of next year. So this is why those subsidy numbers are getting really big in the second half of 2024, and why it is very important for First Solar to have these subsidies in place in 2025 and beyond, why there's a lot of uncertainty around the business as well. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So is First Solar stock a buy? What's the future of shares? The biggest thing is these subsidies is something that I just can't get over. You look at the numbers. So operating income expected to be $1.5 to $1.6 billion in 2024. But the expected impact of Section 45X tax credits is $1 billion to $1.05 billion. That means that about 2/3 of the company's operating income is coming from tax credits and subsidies. If those subsidies change, if other manufacturers move into the US and start taking advantage of those subsidies and start lowering their prices in the future, these are all threats to the company's bottom line. And there's a lot of operating leverage when it comes to these subsidies in particular. So that's why there's so much uncertainty for First Solar going forward. And investors are still paying a lot for the stock. First Solar has a market cap right now of about $24 billion as I'm recording. The trailing PE multiple is 19. The forward PE multiple is 12. That seems pretty reasonable. But like I said, about 2/3 of the company's profitability is coming from these tax credits. So just simple numbers, if you assume that profitability falls by 2/3, that means that the price to earnings multiple is over 30. That's a much more expensive company, especially in a very highly competitive market like that. The final thing is this is a company that will grow if production continues to grow over the next few years and the price of solar panels increases. But look at this long-term trend. First Solar, not really a long-term growth stock. And you can see that what an aberration the recent increase in profitability is. Yes, this is one of the best companies in the solar industry, but that doesn't mean that it's going to be a high growth stock or a really high profitability stock long-term. This is not a stock that I'm buying right now because of the uncertainty around these subsidies. This has been a tailwind behind the company for a number of years right now, but that's also why the stock is up 231% over the past 5 years. The impact of these subsidies and the Inflation Reduction Act has already been priced into the stock. So now, has the risk of those subsidies going away been priced into the stock at all? The answer is no, and I think that's really the risk for investors, is that there is some sort of political change, there's some sort of policy change that has a devastating impact on the bottom line. So something for investors to think about. I will say on the positive side, First Solar serves primarily the utility scale solar market, and that is going to give much more visibility for the future. It's going to be much more stable demand. That has been what's really been a benefit from the company, as a lot of the residential solar companies have fallen by the wayside over the past year. They have much shorter sales cycles, much shorter demand cycles, so fluctuations in interest rate can really devastate their businesses. Fluctuations in policy on a local level does exactly the same thing. First Solar doesn't have the same risks from a policy standpoint. So keep an eye on legislation action, what the political landscape is like in the US. I definitely don't think investors should be investing based on politics, but in this case, the impact of the laws that have been passed over the last 4 years and the potential for any changes over the next 4 years could have a huge impact on First Solar's bottom line. So let me know what you think in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.